Hi, everyone. Welcome and thank you for joining us today. I'm Olivia Higgins from futusg Singapore, and this is a joint webinar organized by Lion Global Investors and futusg Singapore, the Moomoo trading app. Now, in the past 2 days, we covered a series of topics. We did the macro trends in 2022. Then we did the opportunities in the Singapore equity market. And that brings me to my topic for today. Could 2022 be yet another rockstar year for the Vietnam equity market? And that leads me to our last speaker for our webinar series, Kok Fook Meng. Now, Fook Meng is a portfolio manager with analyst responsibilities for Thailand and Vietnam within the Asian Equities. Now, ASEAN team as well at the Lion Global Investors, and he was previously the specialist for the industrials and automotive sectors. He has 24 years of financial industry experience, and in 2019, Fook Meng was named the best fund manager Singapore for the Equity Emerging Markets Asia category at the Citywire Asia Awards in 2019. Hi, Fook Meng.
Hi.
Hi, thank you so much for joining us today. Now, I'm really excited to know what your analysis is and for your presentation later. So I look forward to it. The floor is yours.
Thank you, Olivia. So welcome everyone to this forum. I'll start with slide 3. So before I start on Vietnam, I just want to give a brief background on our company, Lion Global. We are part of the OCBC group in Singapore. We have OCBC Bank, Great Eastern Life, which is our insurance business. Then we have Bank of Singapore, which specializes in private banking. OCBC Securities, which is a securities broker. And finally, of course, ourselves, Lion Global, which is the asset management arm of the group. So Lion Global has been in the asset management business for 35 years, and we currently manage about 71 billion of assets, both in Asian bonds and Asian equities. That is equivalent to US dollar 53 billion. Now on Vietnam, I want my short presentation today to give you an idea of why Vietnam is such a compelling long-term investment opportunity for you. And secondly, reasons why you want to invest in Vietnam now, in spite of current concerns such as inflation, higher interest rates, and also geopolitical tensions in Europe. So in a nutshell, why Vietnam and why now? Slide 4, please. Now, Vietnam is quite a straightforward story. 3 basic elements. Firstly, it is still at a very low economic base compared to some of its more developed economies in Southeast Asia, like Thailand and Malaysia. So plenty of long-term growth opportunities there. Secondly, it is attracting a lot of foreign direct investments, especially in manufacturing. For example, Samsung, everybody knows Samsung. They manufacture half of their mobile phones in Vietnam. Vietnam has been able to attract sizable foreign direct investments because of its relatively lower cost compared to its Asian neighbors, and also supportive government incentives. Now, manufacturing has 2 powerful levers over primary industries like farming, which Vietnam emerged from. First, manufacturing creates more jobs, both within manufacturing and also indirectly in supporting production and services. Secondly, manufacturing jobs generally pay better compared to farming jobs. And this leads us to the third point, which is an emerging middle class in Vietnam that will be spending not just on basic necessities, but also consumer discretionary items and services like luxury goods, theater, restaurant dining, travel, and also big ticket items like houses and cars. I will elaborate on these points in the next couple of slides. Can we have slide 5, please? So this chart shows you the GDP of Thailand and Philippines since 1960, and also for Vietnam since the mid-1980s. We only have 1980s for Vietnam because data was not collected before that. It was a communist country. We chose Thailand and Philippines for comparison because they both have a good growth model that is led by exports, manufactured goods in the case of Vietnam, and for the Philippines, that's in services. In terms of population size, they are also quite comparable, with Vietnam and Philippines at about 100 million people, and Thailand close to 70 million. As you can see on the chart, in 2020, Vietnam's GDP is only 2/3 that of the Philippines and about half that of Thailand. So imagine if Vietnam grows at 7 to 8%, which is what it has been growing over the past 2-3 decades. So 7 to 8% each year, it will not reach where Thailand is currently in terms of the GDP, not in another 10 years. So there's plenty of room to grow for Vietnam. Slide 6, please. Because of Vietnam's low base, you can see here that Vietnam's GDP has been able to grow on an average between 5 to 8% every year since the 1980s. That's the band between the two red lines that you see on the screen. This rate was disrupted, unfortunately, in the last 2 years because of the pandemic, where Vietnam grew only slightly over 2% for both these years. In fact, that's better than most of its neighbors, especially for 2020, where most economies actually contracted. Vietnam still grew 2%. But with the reopening happening in Vietnam and across the globe, consensus estimates has Vietnam bouncing back to 7.5% GDP growth this year. Again, because of the low base, its economy has the potential to continue to grow at this kind of levels, mid to high single-digit range in the next several years, in our opinion. Slide 7, please. This chart here shows the foreign direct investments, or FDI, in Vietnam from 2013 to 2021. The bars shows the committed capital for each year. These are not actual spending. The blue line represents implemented FDI, which is the actual spending of capital that has been committed either in the current year or the previous years. You can see that the actual spending, which is the blue line, has been growing and is about 8% of 2019's GDP. You can also see the decline in 2020 and 2021 just a bit because of pandemic restrictions. Flows were not going in terms of people visiting Vietnam to do the due diligence before they commit on FDIs. But that should grow again in the coming years as committed capital that has been committed in the prior years is still sizable, and it consists and makes up a big backlog for future actual spend of FDI. So FDI is important for Vietnam because it creates more jobs, as we mentioned earlier, and typically they are higher paying. And manufacturing FDI in particular drive exports, which adds to Vietnam's economic growth. Slide 8, please. Now here it shows Vietnam's export growth and the contribution of exports by the different industries. The red line is yearly percentage growth, and the bars are the industry's contribution to that growth. You can see that exports have been growing very strongly at high single-digit to double-digit percentage every year. A large part of that is driven, as I mentioned earlier, by manufacturing FDI, which has contributed also to exports in higher value-added goods like computers, not just agriculture products, which and also textiles and garments, which Vietnam used to export. So computers and electrical goods, mobile phones, machinery, and also equipment. These are indicated by the 3 shades of blue at the bottom of each bar. Again, this shows the importance of FDI to Vietnam's economic growth. Now let's go to the next slide, slide 9. Here you can see how Vietnam's exports have grown over the years. The blue bars are dollar value of exports, which has grown by about 6 times over 12 years to about 10% of Vietnam's GDP in 2021. The red line shows Vietnam's share of global exports, which has been increasing since 2009. This underlines Vietnam's competitiveness as an export center. I mentioned earlier, one of the advantages is lower costs. Its global share did drop in 2020 and was flat in 2021 because of the pandemic. but we expect it to continue to gain share in the coming years. It has about 1.5% of the global share. You can see on the right-hand side of the chart at the end of last year. This may seem small, but it's actually not small, because if you consider China, which is the world's #1 exporter, it has only about 12% of global export share. So 1.5% is significant. Again, much of this has been driven by manufacturing FDI. Let's go to slide 10. So far, we talked about Vietnam's low economic base and how FDI sets up the foundation for growth in Vietnam. Now let's shift to consumption. This chart here shows the per capita GDP of Vietnam. And again, we chose Philippines and Thailand for comparison for the same reasons that we have explained earlier. You can see that Vietnam's per capita GDP is 2/3 that of the Philippines and only 1/3 that of Thailand in 2020. So with more jobs and also higher paying ones, we expect the middle class in Vietnam to grow, which will be very positive for consumption, especially for discretionary spending in the medium to longer term. Slide 11, please. This chart gives you an idea of how much the middle class in Vietnam has been growing since 2016. It also shows the projections to 2026. It was about 12% of the population in 2016, and it's projected to grow to about 26% by 2026, or about 26 million middle-class consumers. That's equivalent to per annum growth of 7% over that 10 years. It is also worth noting that income will continue to rise with the growth of the economy. So you have a combination of more middle-income people and also higher income. So this will definitely drive consumption and growth of the Vietnam economy. Let's go to slide 12. A growing middle class is typically correlated to higher urbanization. The gray bars you see in the chart are the urbanization rates of different countries in 2010, and the blue bars in 2019. You can see that Vietnam's urbanization in 2019 is only at 36%, compared to, say, Thailand at 50% or Malaysia at 78%, so much higher. And together with China, the pace of urbanization is also the highest in the chart, as shown by the blue line. Urbanization will drive growth as there will be investments in infrastructure like roads, bridges, airports, etc., to support the bigger cities. Bigger cities need bigger infrastructure. So there will also be strong consumer demand for property and related products, like furniture. You buy a home, you need to buy TVs, home entertainment devices, home appliances, and services when you go out, like entertainment and restaurants. Can we go to slide 13, please? On this slide, you can see that the consumption growth that has been happening in Vietnam, or the black line that shows the annual percentage growth in retail sales. And you can see that it has been growing at double digits before the pandemic hit in 2020. We had a small growth in 2020 because the lockdown in Vietnam in 2020 was much lighter compared to its regional peers. But it underwent severe lockdowns in 2021 because cases skyrocketed in 2021. And that led to a contraction last year because not because people do not have the money to spend, but because they have nowhere to go. Every place was locked down. So with Vietnam's reopening this year, retail sales should rebound this year and continue its robust growth in the medium to longer term on the back of Vietnam's expanding middle-class consumers. Let's go to slide 14. Another driver of consumption that is not often talked about in Vietnam is remittances from Vietnamese overseas. These can be people that have left the country and are no more citizens, but they still have family in Vietnam, or they can be people working, they are Vietnamese that are working abroad, so they send money back. So remittances grew close to 14 times from 1.3 billion US dollars in the year 2000 to 18 billion US dollars in 2021. Now that's 6.5% of Vietnam's GDP growth, which is sizable. We expect remittances will continue to grow and contribute to the longer term consumption story in Vietnam. Now let's go to slide 15. So on slide 15, we now move on to why we think it is still a good time to invest in Vietnam, especially if you have a longer term view, in spite of the many concerns in the current environment. Firstly, Vietnam's GDP is ripe for a rebound after 2 pandemic years. Secondly, in terms of corporate earnings, they are still expected to grow this year, and valuations are not demanding. Lastly, corporate earnings should continue to grow in the longer term because there are plenty of growth opportunities across a wide spectrum of the Vietnamese economy. Slide 16, please. Now, the Vietnamese government has indicated at the end of last year that they will unlikely use lockdowns again as a strategy to manage COVID-19. So that's good news. One of the reasons is Vietnam's high vaccination rate, which you can see on the chart, which it is at about 80% of the population is now fully vaccinated. This is on par with Malaysia and only slightly behind Singapore in Southeast Asia. Now, Vietnam has also lifted all limits to international flights since 15 February this year, so just a couple of days ago. This means that flight frequency can be restored to pre-pandemic levels. There is also a proposal currently to ease travel restrictions further for foreigners entering Vietnam starting March 15 this year. We are optimistic that that proposal will go through. So some of the lesser measures would be that there will be no need for negative pre-arrival PCR tests, which will significantly reduce the friction of international tourism. Slide 17, please. Now, Vietnam also removed most of its domestic restrictions in the fourth quarter of last year after their very strict lockdowns in the third quarter of last year. Now, after the easing, you can see in the mobility data on the chart that Vietnam's activity, indicated by the gray line at the bottom, is already slightly above the pre-pandemic level. So things are definitely happening and returning to normal in Vietnam based on movement data. Now, if we move on to slide 18, another reason for the government's bias towards easing is new COVID-19 cases versus deaths. Now, the top chart shows daily new cases, and the bottom chart, the daily deaths since the start of the pandemic in 2020, early 2020. You can see that when the daily cases, while the daily cases now are higher than in 3Q21, you see the first bump on the right on the top chart. That was the previous peak in the 3Q last year, and then currently you see the second bump. But in contrast, if you look at the lower chart, the second bump on the right, which shows the number of deaths, are actually lower than the 3Q peak, and they're continuing to fall. So that's good news. Now, this is likely due to a combination of one, higher vaccination. I mentioned 80% fully vaccinated. And also the Omicron variant so far has been shown to be less pathogenic. So people contracted, but they don't get hospitalized. Even if they get hospitalized, they do recover quickly, and the symptoms are not as severe as compared to Delta. So on the ground, data does support Vietnam's reopening. Now let's go on to slide 19. So overall, Vietnam is primed for a rebound in 2022. And it is forecast to have the highest GDP growth in Asia this year at about 7%. So the range among consensus is about 6.5 to 7.5%. And this is indicated in the red bar on the chart. So Vietnam is on the far left, red bar for 2022, and its highest among its Asian neighbors. Now let's go to slide 20. Now, the other consideration whether to invest in Vietnam is definitely valuation, because nobody wants to overpay for what they want to buy. This chart shows the forward PE of the FTSE Vietnam Index over the last 7 years. The red line is the mean PE, and you can see that the market is now trading at 14.9 times, which is below the 7-year mean. At the same time, it is giving you a 17% growth for 2022 based on consensus estimates. The same can also be said of the broader Ho Chi Minh Index. We didn't show you on this chart, but you look at the second point. It tells you that the Ho Chi Minh Index is trading at 14 times and gives you 20% growth this year. So valuation is still undemanding, and you are getting decent earnings growth for that undemanding valuation. Let's move on to slide 21. Now, many of you, I'm sure, have been to Vietnam, and if you have been there, you can definitely see the growth opportunities there and feel the dynamism of the economy, and also the most importantly, the Vietnamese people. They are very dynamic, very disciplined, very hungry. There is growth across a broad spectrum of the economy, be it banking, retailing, or property or infrastructure, which we believe will continue to play out in the medium to longer term, given that Vietnam's economic base is really very low. Let's now move on to slide 22. Now, I've given a lot of positives, but of course, not everything is rosy. There are some near-term concerns that we have, some of which we briefly highlighted earlier: inflation, interest rates, and perhaps a risk of US and China slowing down. But the first three are external to Vietnam, so there's really not much they can do. And it affects everybody, not just Vietnam. So Vietnam is not alone. It's a global thing if these three factors does affect Vietnam. Now, the last one is slightly different. It's lockdown. So that is in the hands of the Vietnamese government. We think further lockdowns are unlikely given the trends of the pandemic at this point in time. And the government, the Vietnamese government, has also been messaging to the public recently that that's not likely their strategy going forward. So we don't think this risk is very high. Now, let's go to slide 23. So this is my last slide. So to wrap up, let's recap on the key points that I want you to take away from my presentation. So you want to invest in Vietnam because the country is still starting out, very low base, as I mentioned. It is still attracting a lot of FDI that will support growth in the medium term. And finally, you have an emerging middle class that will drive consumption in the foreseeable future. Because of Vietnam's attractive long-term growth story, now is still a good time to invest in the country because the economy is reopening. That's very clear. You have decent EPS growth for this year, and you are buying in at still reasonable valuations. And finally, and I think most importantly, because of the long-term prospects, you should not be too concerned of near-term uncertainties if you are a long-term investor in Vietnam. So with that, I want to wish all of you success in your investments, and I'll hand the forum back to Olivia.
Thank you, Fook Meng, for your expert analysis on the Vietnam equity market and its key drivers. And like you said in your presentation, its dynamism going forward into 2022, especially how it starts to open up further to the world. Now, if you have any questions for Fook Meng, do leave a comment in the Moomoo app, and we'll get back to it at the end of the webinar. So keep taking notes, as we're here to help you, and use this as an educational tool to help you make better investment decisions. Now, you've heard the analysis, but how do you exactly get first access to LGI's funds? Now, if you have your Moomoo app with you, I'll show you quickly and give you a summary on how to navigate funds in app. So when you first enter the app, it will just look like this, right? You look for moeyplus and you click on fund houses on the top. You should be able to see the lionglobalinvestors. You click on the LGI icon and you'll see the full listings of the funds run by LGI. Now, over here, you'll have full comprehensive data on what you need to know about LGI, what it entails, its fact sheets, performance, and subscription details. Now, for the purpose of this webinar, we will be using LGI's profile. And so if you can see from the app, here's all the information you'll need to know. On the top right, you've got the general profile, the NAV, net asset value, to calculate the change in price. Now you see a general overview here, but what you can also do is you can go into the details. So for example, under financial funds, you won't know what the company invests in, but you can navigate down to position details to find out more. You'll also be able to assess the weight of each instrument, the performance, the type of region, the type of sector they're all involved in. And as for subscription, I think it's a great complementary tool because it helps you gain a better understanding about the strategy and the concept of the fund house that you choose. Now, my personal favorite, the news feature, is an excellent tool to keep you on top of all the news. You can get the keywords and also the buzz surrounding each topic. So over here, you've got the entire composition across all media channels. It's a summary, but if you click on each article, you'll get the full details. Now, I understand that sometimes details can be a little overwhelming. So if you like to just take a more macro approach, in that case, you can access the entire summary of this profile under summary. It's essentially the basics. So the country, the fund documents, and over here, the fund managers. Now, if there is one key takeaway you take from this demo, it's this, right? So in determining a fund house to invest in, I think it's crucial to both measure performance, but to also find someone you can trust to manage your portfolio. So this is an active management portfolio feed. So you're able to access credibility and also details of every manager involved in this fund. It's a great tool if you want to find someone you can trust to manage your money. Now, if you have any questions about this feature, you can always leave a message for the team and we'll get back to you. Now, overall, this is to just give you the comprehensive data so that you can help yourself in making a better investment decision. All right, now I would like to invite Fook Meng back into the room because we're about to start the most exciting part of the webinar, the Q&A. Now, Fook Meng, a viewer would like to know, how will the rising interest rate outlook affect frontier markets like Vietnam?
Okay. In terms of the translation from the US markets to the emerging markets, it's actually not direct. So it varies from different country to country. But let's say for Vietnam, in terms of the borrowing of corporates there, and also on the government, on the US exposure is actually not very high. So it's mainly domestic borrowing. So domestic borrowing in terms of liquidity is still quite high in Vietnam. So in terms of the interest rate impact, it should not impact very much, even if there's an increase in US interest rates. So the impact is more really in terms of sentiment, because typically global asset prices are priced against interest rates. So when global interest rates, which is led by the US interest rates, rise, the theoretical value of the assets go down. So when you have that concern, you can see a short-term outflow of money from emerging markets, including Vietnam. So I see that more as a technical negative effect, which is short-term. But if you look at it from a fundamental standpoint, I mentioned earlier, there's really very little linkage between the two interest rates.
Mm-hmm. So what are some of the key industries in Vietnam that have potential for growth in the next few years?
I think banking is one of them, because banking touches everybody. So when the economy grows, banks will definitely benefit, which is why we are overweight in banks. You will also want to be invested in infrastructure names, because infrastructure is still lacking in Vietnam. The growth there is outpacing the infrastructure investment. So you want to get into companies that have exposure in that area. And then, of course, you want to be exposed to the consumption story. Consumption story is really just starting in Vietnam. So you want to get exposure to retailers, you want to get exposure to consumer brand owners, and even to property, both in terms of residential property and also to commercial properties like shopping malls.
Mm-hmm. So considering de-globalization and trend to sort of, I guess, shorten the supply chain, will this affect Vietnam's industrial development and then the implication on the stock market?
It's actually it will actually benefit Vietnam. We saw this movement before even the trade war that was started by Trump. We saw a lot of inquiries from the regional countries to move into Vietnam because Vietnam has a very low cost base. So as the regional countries become more expensive and they are squeezed by their customers, they want to reduce their cost, so they move to a lower cost base, which is in Vietnam. So that happened before the trade war between US and China. So when the trade war happened, it accelerated the whole process because you want to not be too concentrated in China. So you want to move out of China to basically diversify your manufacturing base. So again, Vietnam benefited from that because they saw a lot of inquiries and a lot of investments that came in over that period because people were moving out from China, this time from China to Vietnam. So first wave from neighboring countries, places like Thailand to Vietnam, and now you have from China to Vietnam. And then the third wave is the pandemic. We have all these supply chain issues that we have seen over the past 2 years. So again, this time, instead of diversifying, first it was diversification because of cost. Second phase, it was diversification because of the trade war. And now you have diversification because of supply chain de-risking. So you don't want to concentrate all your manufacturing into one area. You want some diversification of your production. So they have also benefited from this diversification. So it's not just Vietnam. You're seeing this also in Malaysia and also in Thailand. But I would say if you compare the three, Vietnam has been the bigger beneficiary compared to the other two.
Interesting, because the next question someone would like to know is is the Vietnamese stock market volatile compared to the other Asian markets? And I guess to streamline this, we're talking about ASEAN.
Volatile. That's how should I put it? It depends on which time period you measure it. So if you measure it from if you measure it from last year, actually it's not volatile. It has been moving up very well. I mean, Vietnam was up 30% last year. So I think the two points here. The key is not to be too concerned about the volatility previously, but think of the volatility going forward in the short term. That's one. And secondly, think of your investment time horizon. Because if your investment time horizon is long, you shouldn't worry too much about volatility because markets will have volatility. But if the growth is there, it will be volatility upwards. Okay, but short term, if you think of where Vietnam came from, which was last year a phenomenal return of 30%. This year, probably you will see more volatility compared to last year. But again, I go back to my point, which is the second point, which is you really should ask yourself what is your investment time horizon. If it's longer term, you shouldn't really be too concerned with short term market volatility. Yeah.
Absolutely. I think this is a really important point because there is a lot of talk about volatility and sort of fear and should I not. So I think it's important what you mentioned, even for myself, going forward with this. So talking about, even in your presentation, Vietnam opening up, right, to the rest of the world, someone would like to know which sectors other than tourism related ones would stand to gain most from the acceleration of Vietnam's full border reopening?
Okay. So tourism, as you mentioned, is one. The other one will definitely be consumption, because I mentioned last year there was a lot of lockdown, especially this third quarter of last year. So because they were not able to spend last year, so we expect this year in terms of growth to be there. But I have to caution that, because the growth for consumption will not be even, because those who still kept their jobs continue to earn a salary, but there's also the lower income group that lost jobs and lost salaries also. So this group will still be affected this year. So in terms of where you want to pick your investments, I would say that the discretionary part of the consumer sector would be benefiting more from this rebound, rather than the consumer staples. So that's one, consumption. The other one is property. So property was in terms of the launches, they were restricted last year, because it doesn't make sense for the property developers to launch their projects, because they won't have customers, because they are not allowed to go to the showrooms. So there should be more property launches this year. So property will be another area that will benefit. And lastly would be banks. Banks touches everything. So if the economy rebounds, banks will definitely benefit. So short term, in terms of the reopening trade, I would say these three, including tourism. And tourism is not just hospitality. It also includes infrastructure like airports and also airlines. Yeah.
Thank you, Fook Meng, because that was a very comprehensive analysis, and I think the viewers really enjoyed, and they're taking notes as well, like how I am. So someone would like to know, do you expect any positive impact from the pending merger of the HCM stock exchange with the smaller Hanoi stock exchange?
It shouldn't. Yeah, there should be no positive or negative impact, because basically you're just combining two into one. So the key thing is whether the backend can take care of the trading volume. So there could be some hiccups initially, but that should be sorted over a reasonable period of time. So I don't see any pluses or minuses from that combination.
What sort of hiccups do you anticipate, or what do you mean by this?
Okay, so if you have two stock exchanges coming together, the back end will have to handle a combined volume. So if you have to handle a combined volume, the back end has to be able to take the volume that that combined entity generates. So if they can't, if the back end is not ready, then you can have a stock market freezing. So they may stop trading for whatever reason. So stopping trading is actually a loss of opportunities. For example, if you're a securities broker, I mean, every trade means a commission to their P&L. Yeah, so it's more the whether they can handle the increased volume of a combined entity.
And how does Vietnam compare to like the rest of its close neighbors? I mean, why Vietnam out of all the other surrounding neighbors? I mean, there is competition there.
Competition in terms of?
I suppose in the sense we're talking more macro.
Oh, okay. I think if you look at the example that we gave just now, right? So let's say if we look at the ASEAN region, so you have the developed economies like Singapore, and then you have those that are slightly ahead of Vietnam, that is Thailand, Indonesia, and also the Philippines. And you have those that are behind Vietnam, that's Myanmar, Laos, and Cambodia. Now, if you look at where Vietnam sits, it's actually in a sweet spot, because it's more competitive compared to, let's say, Myanmar, because the infrastructure is there. It's more developed than them. So, I mean, if you don't have the infrastructure and if you don't have a stable government, we saw the coup in Myanmar, it's very difficult to attract investment. So Vietnam, you have low cost, you have a stable government, and they have been attracting FDI. Now, it sits at the center there, and if you contrast that with, let's say, Thailand and the Philippines, especially Thailand and Malaysia, I mean, they are already quite ahead in terms of growth compared to Vietnam. So for them to make the next leap forward is going to be more difficult. They have to go into more higher value products. They have to be more innovative compared to Vietnam. So Vietnam has the advantage compared to the more developing ASEAN countries. So that's why I say Vietnam currently sits at a nice sweet spot, and it should be able to outgrow the more developed, both the more developed ASEAN countries and also the less developed ASEAN countries because of that.
Right.
And also because domestically, because of higher incomes, you have the consumption push also domestically for Vietnam. I mean, the first time I visited Vietnam compared to now, it's really day and night. You really see a drastic change, and it's changing very quickly. Yeah, very dynamic.
The last time I was there was quite a while ago, and I look forward to actually visiting myself again. Yeah, I think that's an interesting take, and I think it adds value to shifting the perspective on what it is now and how it's looking like going forward. So for a new investor, okay, so this question comes from a new investor. What are the key drivers to the sudden spike in interest for Vietnam?
Okay, the interest has. I'm assuming the question is coming from the stock market perspective.
Yes.
Okay. I think the interest is because of what Vietnam has done in terms of performance, right?
Mm-hmm.
It has been very strong over the past few years. So it started in 2017. If you go back to 2017, it's not just Vietnam that did well. It's actually all emerging markets. So that coincided with a strengthening of the emerging currencies against the US dollar. So typically, if that happens, it's positive for emerging markets. So Vietnam was one of those beneficiaries. So during 2017, a lot of the companies, some of them SOEs, also took that opportunity to list the company. So there was a lot of excitement there. So you saw that move. But come 2018, there was a correction globally, especially in the last quarter of 2018. And 2019, basically, it went nowhere. Now, come 2020, the catalyst for the stock market was really COVID-19, because there was a big crash at the beginning of the year. And things just suddenly went very cheap again in terms of valuation. And then secondly, what happened was a lot of people were staying at home, including the Vietnamese. So what they did was they had time on their hands, and they saw an opportunity because the market has just crashed, and they have money. So the locals actually went into the stock market, which drove the performance in 2020. Now, that happened not just in Vietnam, but it happened in the regional economies. So you see that in Singapore, you see that in Malaysia. And to a lesser extent, you see that in Thailand. But for these three countries, it kind of went away in 2021. But that did not happen in Vietnam. Vietnam retail investors continue to be aggressively investing in the stock market in 2021, which drove the performance also. So this is despite foreign funds actually being net sellers of the market for both these years. So you have this move in terms of the stock market, which excited quite a lot of people. 2017, then it flatlined, 2018, 2019, and then 2020, 2021, it went up a lot again. So a lot of excitement. The other thing is, of course, fundamentally, it has to be solid too in order to create the excitement. I mean, I went through the presentation earlier, so you can see the growth opportunities there. And you contrast that to valuation is still not expensive. So I think people are looking for ideas. If you look at the US markets, the S&P is trading currently at about 19 times. this Nasdaq is about 26 times, 20 over times, high 20s. So you compare that with Vietnam, low teens, giving you the growth. In terms of decoupling, I mentioned earlier, it may not be that affected by a higher interest rate. It kind of runs on its own in some sense. So you contrast that, and you contrast that also with the longer term growth potential for Vietnam. It really makes a attractive investment proposition. So if you sum all that up and you think of it, then there are few minuses, but there are plenty of plus, which is why it's attracting a lot of attention from investors.
I find this question interesting. It's a parallel question with China. So do you agree that Vietnam is another China story? And if there is a difference, or if there are differences, what's the difference? I suppose they're talking about success stories over here. We can go into the failures too.
Sure. I think it's quite hard to compare with China. I mean, China is a big gorilla. I mean, it's 1 billion. Yeah, it's 1 billion people, a much bigger landmass. Vietnam is only 1/10 of what China can offer. And if we, there are some arguments that say that Vietnam can replace China as a global manufacturer, but I don't think that is possible, because if you combine the total production manufacturing workforce for Southeast Asia, the entire Southeast Asia, not talking just of Vietnam, is when you add all that up, it doesn't even equate to what China has to offer. So number one is the size of the economy. Number two is the size of the production workers. So it's really hard to compare with China, but the similarities are there, because China is also communist, Vietnam is also communist. So in terms of taking the country forward, assuming the policies are good and right, then that's a positive, because theoretically, you can move very fast. Although Vietnam, I have to say, is slower compared to China. So that's on the political leadership front. And if you look at in terms of the growth, China was also export-led. Now Vietnam is also export-led. So if they continue to get their act together, because of the low base, definitely Vietnam can be on the same trajectory as China. And if you take closer neighbors like Malaysia and also Thailand, don't even have to compare with Vietnam. You see the same trajectory, because Thailand has grown because of exports, Malaysia has grown because of exports, and the GDP is bigger than Vietnam, and the GDP per capita is also bigger than Vietnam. And if you visit all these three countries, or four countries, including China, and you imagine what Vietnam can be, it's quite easy to form a picture of strong medium to longer term growth for Vietnam. Yeah.
Wow, that's exciting. Well, I think that, thank you for addressing the complex question, because it's hard to just compare it directly, and I think there are other variables in other countries that also draw parallels to this case. But thank you for outlining and giving us a summary of the similarities and the differences for this question. And thank you to the viewers out there for all your great questions today. It was very engaging, and we enjoyed this discussion and having you with us. Now, Fook Meng, do you have any final thoughts or key takeaways for our viewers out there?
I think the key takeaway is, if you want to invest in Vietnam, you have to think long term. Don't focus on the short term. Yeah, that's the key takeaway. Thank you.
Excellent. Thank you so much for joining us today, Fook Meng, and for your expert analysis, and to the viewer as well for engaging in the discussion. Now, remember, we're here to provide you with the educational tools to help you make better investment decisions. So stay tuned for more webinars like this. And in case you missed out for the last 2 days, you can always get more information on our Moomoo app and look for our socials, our updates for webinars, but also for replays, because we do keep them updated. Now, once again, I'm Olivia Higgins, and thank you, Fook Meng. Thank you all for watching. It was a pleasure having you today with us. We'll
Thank you.
see you for the next webinar.